Hello, everyone. Welcome to the Maples Q2 2026 ecosystem update. I'm Sid Powell, the CEO and co-founder of Maple, and today I'm joined by Joe Flanagan, my co-founder and our chairman. So we've got a lot of ground to cover today regarding Maple's performance in the first half of the year, the financial position, and where we're taking the protocol next. So let's dive in, briefly look at the agenda for today's call. So we're going to kick things off with a look back at the first half, so performance, driving into Maple's key metrics and growth. Joe will then take over to highlight some of the product releases and partnerships and major milestones that we had over these 6 months. After that, I'll come back to discuss the financials and the token utility and the new governance proposal that we've got. And then Joe's going to return and discuss strategy and Maple's roadmap for the second half of 2026. Then finally, we'll wrap with a bit of an update for our communications cadence and how we'll communicate updates to the community going forward. And then we'll save some time at the end for a Q&A. With that, let's dive in. So we're going to start by looking at Maple's performance in the first half of this year. So we're going to cover revenue, deposits, loans, ARR, and the performance of the yield, as well as some of our key product updates. So in a lot of ways, the first half of 2026 was a record period for Maple. So we achieved 4.6 billion in total AUM. So you can see growth of over 80% from this time last year. We had year-to-date originations were a record of 5.4 billion. So an increase again of over 100% year on year. And ultimately, this was backed by strong capital inflows that we saw on the deposit side. So 2.2 billion, and then the revenue for Q2 of the year came in at 4.4 million. So again, when you look at Maple's trajectory year on year, this has been very strong growth that we've seen. And again, reflected in those numbers. So the 1.9 billion in loans outstanding and the outperformance that we've seen on Syrup USD versus its peers. But we will have a chance to look at all of these in detail. So let's take a look at the revenue. Now, revenue was up 47% year on year in Q2. And it's worth noting this was against a much weaker market backdrop that we saw. So you can see the clear trajectory of where from this time last year, we were doing about 3 million in quarterly revenue. Now we're at about 4.5. We did have a bit of a decline quarter on quarter, but this is against the backdrop of Bitcoin going from 95K at the start of the year into the high 50s over the last month or so. As we look at ARR, you can see the business has remained relatively resilient. So again, you're going to see that this is up nearly 50% year on year, but it's worth noting that 17.5 number, this shows the resilience of the business when you factor that the overall DeFi pie shrunk a lot in the second quarter. And so Maple was able to gain that ground back. And it shows that, customers value the loan product. The yield has been outperforming. And that's why we're able to make back a lot of ground in terms of the deposits and really position ourselves well heading into the second half of the year. A couple of the drivers of that NIM compression or of the compression in revenue being slight NIM compression. And as we'll see as we get a little bit further into these slides and look at deposits, withdrawals that we saw across the DeFi space following the kelp incident in April. Now, Maple's AUM, look at this chart. So we nearly doubled since this time last year. So we're sitting at 4.6 billion assets under management. We've essentially, it's worth digging into the quarter on quarter change. So you can see very strong year on year growth. Close to doubling, but if we dig into the number where it kind of looks flat quarter on quarter, what you would actually see is that at the start of the second quarter following kelp, AUM got down to 3.3 billion, and the team has actually done an incredible job to claw that back and get it back to the 4.6 billion number, with a lot of that growth occurring in May and June, showing a very quick rebound, and again highlighting that point I mentioned before around the resilience of the product. Our loan book hit an all-time high at the end of this quarter of 1.9 billion. So this was around 123% increase versus last year. And interestingly, juxtaposing what we just discussed around the quarter-on-quarter shift, we actually went up. We grew the loan book by 2/3 quarter-on-quarter. So what you're seeing is Maple was actually able to significantly increase the utilization of the loan book from being in the 30s and 40% during Q1. Now, utilization in a lending business is very important because any unutilized dollars, so dollars that are not going into loans, is a cash drag. So it leads to underperformance on the yield. But by getting that utilization up, we're able to produce better yield for our lenders, and we're able to produce better NIM for token holders and for the core business there. So very happy with that result at the end of the quarter, and it shows the traction and the market share that Maple is gaining among CeFi and DeFi lenders and the strong demand for our products. And we can see that here in this chart. So if you look, Maple was actually able to grow 22% over the quarter amidst a backdrop where DeFi lending itself was really contracting by about 1/3. So you can see very strong market share where we're sitting at about 20% of the overall loans that are being tracked across the market. And this has not come at the expense of revenue. So Maple makes, the business model relies on net interest margins. So we lend out at this rate, we borrow or pay out to lenders this rate, and Maple keeps the spread in between, which is what is referred to as the net interest margin. But you can see we're able to get the loans up and we're able to take market share without sacrificing revenues, or as we'll see on the next slide, having to sacrifice on the yield outperformance versus our peers. So here we go. So deposits reached 2.2 billion at the end of this quarter. Now it's up 81% year on year. So again, the longer term trend is very significant growth for Maple. You can see there has been a quarter-on-quarter decline there, which was between March and April where kelp happened. So you saw outflows really across the entire DeFi space. But you can see that Maple was able to rebound very quickly, where since kelp, we've actually managed to add over 500 million of new deposits onto the platform. Again, showing that people view Maple as a strong risk-adjusted yield versus peers and a safer place to park funds. And again, as Joe will talk through shortly, we've seen a lot of strong growth on the partnership side. So very happy with that result in terms of total deposits versus where we were this time last year. And finally, just rounding out this section, so you can see Syrup USD. This is really one of the secrets to the deposit growth. Syrup USD has been able to outperform major DeFi peers in terms of yield quite significantly by over 110 basis points. This creates for us a positive flywheel where, as we outperform on yield, more deposits come in, which enables us to do larger loans and continue gaining market share, which in turn produces more positive yields. So it's worth calling out here. Syrup USDC is a top 3 yield-bearing stablecoin product across all of DeFi, and yet it's outperformed significantly, generating that 4.9% yield on average. And Syrup USDT, again, is a top 10 stablecoin yield-bearing product, producing 4.1% yield. So still meaningfully outperforming the other DeFi opportunities there. But what I'll do from here is hand over to Joe, who will take us through the first half highlights and some of the product milestones for us.
All right, thanks, Sid. So that was great quantitative overview and part of our new and improved investor update calls that will be the standard moving forward. But now looking at some of the qualitative things or bigger and larger announcements and focus points throughout H1. So the highlights for us across the first half, as Sid just exemplified, were really the growth in our borrower base and the growth in our loan book. And so this was on the backdrop of a material downturn in terms of borrower demand, but Maple has been able to position itself as the most active institutional lender in the space. And so the team has been really focused on building up the borrower pipeline, and this is bringing on board new institutional borrowers, a number of public companies, DATs, miners, and further market makers and other trading firms. And so there's been real growth in our borrower base, and has been a real focus, and that's culminated in the growth in the loan book and us reaching our all-time high in loans outstanding at the end of the quarter. Then we've had continued new chain integrations and starting to build out Maple's fintech distribution. And so you would have seen throughout the first half of the year major announcements of our products going on to Tempo, Inc., and more recently Robinhood. And so this is where you can see there are a number of crypto native institutions that are starting to become more and more fintech applications, and a number of fintech applications that don't operate exclusively within the crypto space starting to adopt more and more crypto rails. And so Maple is starting to position itself with these announcements and these partnerships to be at that confluence where a crypto application can adopt Maple products to be able to earn to their customers, and fintech applications that aren't in crypto can start to incorporate crypto rails into their backend, deploy chains like Tempo and Robinhood chain, and then incorporate Maple's Maple's Earn products into their customer offerings. And so this is going to be further focus, and we'll get into what we're going to be looking to do in this realm through H2 and beyond. And then the final thing to call out there is the Kraken warehouse. And so this exemplifies Maple's ability to be at the forefront of creating true differentiated real yield within the crypto ecosystem. And so Sid and I have been working on creating securitization on chain for a long period of time. That was our initial idea for Maple. And so you can see that we were way too early, but it is fantastic to see that the first one has been launched in the first half of this year in partnership with Kraken. And we see this as only being the start of this type of financing arrangement where we can enable securitization or on-chain debt facilities that are structured like this to enable the further scaling of crypto-backed lending. Then in terms of products and other things that we've done more on the business side throughout the first half of the year, is that there's been a couple of major announcements and product releases. And so Syrup USDG is what we announced most recently. And this is really in partnership with Robinhood Chain to enable USDG yield and USDG to access the quality institutional borrowers and real yield that we generate there. And so excitingly, we've already crossed 100 million in deposits and activity on Syrup USDG in only a couple of weeks. And to give some context to that, it took us about a year to get to 100 million on Syrup USDT. And so that shows that the scaled up distribution, reputation, and brand of Maple is starting to scale and enable the quicker onboarding of new assets and the quicker scaling to these milestones. And as we know, size begets more size. So the quicker we get to 100 million, the quicker we get to 250 million, the quicker we get to $1 billion in size. And so we see this as the roadmap to enable more stablecoin launches of Syrup products that are then incorporated into more unique ecosystems like Robinhood Chain. Then as part of that borrower focus, we launched Borrower Hub. And so this is something where we're enabling the institutional borrowers to have a best-in-class experience for the way that they access their debt, manage their debt, and monitor their debt in real time. And so people are able to, users are able to log in as part of their overall entity or organization and see the loans that they have outstanding. They're then able to interact with that. They're able to make interest payments. They're able to top up collateral. They're able to withdraw collateral. And so it starts to create this full self-service ecosystem for borrowers to be able to access all of their on-chain debt needs. And so this is really the combination of Maple creating the best of class in terms of a traditional finance experience for what these types of institutions expect, in combination with the best that on-chain can enable. And so that real-time transparency, that real-time access, the ability to manage your debt portfolio on a 24/7 basis. Then more on the business side, there are a couple of major things. The first is that we did have this core dispute sitting over our heads a little bit, and we were able to bring that to a close. So we were able to settle that dispute, wind that down overall, and remove that distraction from the business. And then importantly, we've continued to improve the quality of the team at Maple. And so as we've scaled up, we've needed to bring on some more depth to the business. And so this has been some new senior leaders across marketing, legal, and trading. And they have already started to have a pretty significant impact on the business. Obviously, on the marketing side, hopefully you will see from this presentation the up-leveling in the quality as a result. And so we'll continue to invest in the team overall, but Sid and I feel pretty confident in the bench that we have now, and that we're in a really stable spot in terms of the size of Maple, the size of our engineering team, our ability to ship and continue to scale from here. Then this is the borrower hub that I mentioned before, and Sid can play the little video for but this gives a quick little look at what the for those that don't have an institutional account with Maple, what the experience is like, and what the key thing is. And so the big thing to call out here is that there's been the rollout's been only live for about a month to 6 weeks, and we already have 300 users onboarded. And so we're seeing that the scale of this and the impact that this is having to the Maple operations team, as well as the feedback that we're getting from our institutional borrowers on the improvements in being able to self-service their loans, is just brilliant. And so there's nothing like this in the market. Maple is kind of setting the standard for the way the institutional debt should exist on chain. And this is something that we'll continue to invest in now that we really have this backbone and base of the borrower hub to enable this continued best-in-class experience for all our borrowers when they come to access capital from Maple. And then the final thing we more recently released was our transparency page. And so if you go to maple.finance/transparency, or if you just go to maple.finance, you'll see at the top there is a transparency link. And so this is the start of us trying to really improve the amount of disclosure that we have. And so this is where you'll be able to come to the transparency page. You can see a breakdown of two major things. One is Maple, the business, our financial performance, revenue, balance sheet, our SSF balances, and so full disclosure on what Maple looks like as a business. And then also our product performance. What is our yield on each of our assets? What is the growth in deposits? What is the growth in AUM for each of the products? And this is just the start. And so you'll start to see this being built out more and more over the coming months. And we're definitely open to requests coming in. If there is certain information that is missing or certain information that you would like to see, please let us know through the different channels we make available, and we'll look to be always adding to this to continue to improve that real-time full disclosure to the community and to our customers.
All right, thank you, Joe. So I'll switch back and we'll look at our financials. So balance sheet, utility of the Syrup token, and as well how we're managing the Syrup strategic fund and governance from here. So I see a lot of debate recently around the divide between equity and token holders, and Joe and I have always thought that it's simpler and it's better if you just pick one or the other. So in Maple's case, the Syrup token is at the center of the ecosystem. We don't have an equity layer sitting above the token. So there's no equity company that we raised VC capital in who have superior rights to the token holders. Joe and I are token holders, the team are token holders, all of the VCs who support and back Maple and the ecosystem are token holders themselves. So there's no dual class here that's in conflict with each other. If you look at our structure, it's kind of worth explaining a little bit about this. So we have the Maple DAO Foundation, which sits in the Cayman Islands. It's memberless, and so it exists to serve the Maple ecosystem and Syrup token holders. So it has subsidiaries which do the lending activity. That's where it earns the protocol revenues. Then a portion of the protocol revenues go to the SSF, Syrup Strategic Fund, where they can be used for buybacks and for growth. And importantly, we don't have a separate equity entity which owns all of the IP and the brand assets. So the IP, the tech, the brand, all of that intangible value sits in a Guernsey trust, of which the Maple DAO Foundation is the sole beneficiary. So everything is wrapped up in this foundation structure with only the Syrup token sitting at the center of that. Any other legal entities have service agreements with the DAO Foundation and with the subsidiaries who do the lending. So in that way, we keep everything wrapped up, simplified. There's only the Syrup token. There's no conflict with equity, as we've seen with some of the other projects, particularly over the last few weeks in discussion. Now, balance sheet is all important. So the balance sheet gives you the strength and the flexibility to work through bear markets like we're in today. And Joe and I have focused on really building a strong balance sheet to work for our token holders. So the SSF was taking 25% of revenue across the first half of this year. So that amounted to about 2.7 million in stables going towards it. You can see today that the SSF holds a relatively healthy balance. So it's got 77 million tokens. It has 4.2 million in stables and liquid assets. That's not the entirety of Maple's balance sheet. We'll get to that in a moment. In terms of buybacks, I know this was like a big point for a lot of community members. So 2025, we did about 8 million Syrup tokens bought back. 2026, that number was smaller. So it was around 2.5 million repurchased. Part of the thinking there was, Joe and I wanted to ensure that we had strong cash reserves and resilience for a bear market. We've been in the position before, we've had to do a raise in the midst of the 2023 bear market. And ultimately, the only way that projects like Maple fail is if you run out of money. So yes, buybacks are great, and we will get to that in a moment, but we wanted to ultimately have the strength so that Maple is in control of its own destiny. It has a healthy cash runway reserve, and it has the balance sheet strength to pursue growth opportunities, key partnerships, and continue growing the ecosystem. Now, if we look at that balance sheet in totality, so the Treasury and the Syrup Strategic Fund, it has over 110 million Syrup tokens, as well as 14 million in stables and liquid assets. So that's healthy runway in case revenue drops to zero. We can keep going. We won't be put in a position where we have to raise from a position of weakness. But we did hear the feedback from the community around buybacks, transparency, and having a clear set of rules around that. So let's take a look at that. So there's three jobs of the Syrup Strategic Fund. We have strategic opportunities. So these could be partnerships, new earn programs, potential M&A. There's support for the token liquidity, so on DEXs and with market makers. And then there are cash reserves for a rainy day, as well as buybacks. Buybacks were the focus of a lot of the community discussion over the last few months. So what we're doing is we will be putting up MIP 21. It's currently up for discussion, but it will go live for a vote next week on the 12th. But what we're going to put in place here is a rules-based framework for buybacks. So we want the ability to scale these in case there are lean months in terms of revenue. And so that's why what is proposed is when revenue is leaner at less than 1.5 million a month, it would be 10% buybacks. Where revenue is in the middle range at 1.5 to 2 million, it'd be around 20% going to buybacks on a monthly basis. And then where revenue exceeds 2 million per month, we would up that to 30% going to buybacks. And again, just a programmatic rule, not having discretion around it. This would just occur monthly. So this is up for discussion at the moment, and then it will progress to a vote next week. But this ensures that the SSF is allocating more to buybacks. There is less discretion involved. And of course, those buybacks will appear on the transparency page. With that, I will hand over to Joe to discuss what we have in store for the second half and beyond for Maple.
Great, thanks, Sid. I would just also highlight on those comments then is that we just released a blog article as well, and so there's more detail out there on the recent MIP and on the SSF Syrup token And so if you want to find out more information, there is plenty there. All right, now let's get into what's coming up in the second half of 2026. So Maple, as you've seen through that quantitative review at the start of the presentation, has done a great job in growing over the course of the last 12 and 24 months. And that has put us into a position where we are pretty unique across the DeFi space, is that there are only a few protocols that are operating at the scale, size, and reputation that Maple is currently operating at. And that gives us access to opportunities that are not available to everyone in DeFi. And to be able to leverage these key things, these key drivers that are starting to converge together. And so I think everyone knows of stable coins, and everyone loves to talk about the potential of stable coins and the continued growth in adoption of use cases of stable coins. But we also know that there is starting to be the tokenization of real assets, and that this is starting to be driven more and more by institutional participation. One of the most interesting things in this bear market is that I've never seen the divergence between the amount of activity, the amount of announcements, the amount of institutional adoption, and price. And so it's important to not let the price of the bear market dictate the view of the continued growth and expansion of the space overall. And the final thing that we're starting to see, especially on the back of the recent Robinhood announcement, is the increases in fintech distribution. And so crypto has operated on its own little island for a long period of time, and capital has circulated within it. And now what we're starting to see is the bridges into the overall financial ecosystem. And if crypto is to realize its potential, that is really what is going to enable it to reach the size that is possible, is when we can start to create the best and bring the best elements of crypto into the broader financial ecosystem. And so Maple is uniquely positioned to do that, because we sit at this confluence of institutional adoption and these other convergence drivers that we're talking about. And so when you bring about the size of Maple and the fact that we're able to access these unique opportunities, and our focus on bringing institutional capital markets on chain, that is going to be the driver that enables us to make the most of all of the capital flowing into the space, and to be the key partner, the key integrator, and hopefully across the space, the key player that is creating on-chain capital markets. Now, how are we going to do that? So Maple's business is very simple. We have the capital sourcing side of our business and the capital allocation side of our business. And we've now broken this out into the product items, or the product architecture, to make that as clear and simple to follow as possible. And so on the capital sourcing side, it's very, very easy to follow. We have Maple Earn and we have Maple Embed. And so Maple Earn is coming to the Maple application and directly depositing into our yield-bearing assets. Syrup USDC, USDT, USDG, and further ones to come. And so this is retail or institutional partners directly depositing into the Maple products that are available, then taking them into DeFi or taking them into other applications to be able to use across the DeFi landscape. Maple Embed, though, is where we're starting to see more and more of the scale, and where our focus is on bringing the Maple products to larger existing customer bases and larger existing capital sources. And so this is us enabling partners to plug into the Maple products and to provide those earn and yield opportunities to their customers directly. So you've seen this with the Robinhood announcement recently, but then Maple is integrated broadly across a number of DeFi partners, CeFi partners, and starting to grow more and more into a number of fintech partners. Then we take that capital and we allocate it. And this is where Maple is differentiated. We are generating real yield through real economic use cases for where that capital is allocated. There are no incentive mechanisms. There are no marketing games. There are no gimmicks that are returning this yield. This is capital being put to real use to generate real yield that then flows back to those parties that are depositing the capital. And so this is on the capital allocation side. Is our main business is Maple Credit. This is our over collateralized institutional lending products that are creating bespoke institutional credit to borrowers. And this is what has enabled us to scale to a $2 billion loan book today and will enable us to continue scaling into the future. The thing that sits in the middle that connects the two sides of these the two sides of the marketplace is our allocation engine. And this is where we are incorporating the best elements of traditional finance. So risk management, understanding where the capital is coming from, and all of the best practices of traditional finance that have been built up over many decades, with the best elements of on-chain capital markets, crypto and blockchain. And so we are incorporating our smart contracts, the ability to monitor things in real time, the ability to start to automate our risk management. And so what you'll see when we go into the product roadmap is that there's a lot of focus in how Maple is building out our allocation engine to bring more efficiency, to enable more scale, and to ultimately generate more and more real yield for those depositing capital into Maple. So what does this look like from a market opportunity size? So if you look at crypto lending today, we're operating at around about 50 billion in size. And so we know that this is going to continue to scale as more institutions come into the space. And we know that Maple has done a pretty incredible job in positioning ourselves as the most active institutional lender in the space today. And so what we see is the potential for this to continue to scale from where it's at today over the course of the next 3 years to $200 billion plus. That's our bread and butter. That's what Maple does today. Then as we start to expand the potential of other allocations into not just crypto-backed lending, but into other tokenized credit opportunities. You look at the recent warehouse that we announced with Kraken. This is just an example of the opportunities that we can start to bring on chain to enable the scaling of Maple's credit business. And so we're extremely excited about, over the course of the next 3 years, the opportunity that there is going to be to bring more and more of these credit opportunities directly on chain through Maple. But this is not just going to be the tokenization of those opportunities. It is going to be the direct issuance of loans on chain. And that is the major thing that differentiates Maple, is that we're not just looking to wrap off-chain products in a token and then deploy it on chain. We are looking to facilitate the best of smart contracts to enable direct issuance of capital on chain that then enables the creation of on-chain capital markets. When that direct issuance exists, that's what enables the continued scaling of an on-chain capital market. And then finally, how are we going to fund all of this? How are we going to fund all of this is the continued adoption of stablecoins. If we look at the growth of stablecoins over the last couple of years, it's gone from 100 billion up to 300 billion. But we know as we start to integrate into the real economy and into the broader financial ecosystem, this is going to incorporate fintech balances. And so we see fintech really as that potential to bring more and more capital that exists outside of crypto into the crypto landscape overall. And so we see that potential growing to, or that whole market opportunity of stablecoins plus existing fintech balances at 700 billion plus. And so that is where the Maple Embed product and integrating our earn opportunities into those existing customer bases and into those existing capital sources is going to enable us to access the capital that we need in order to continue funding the growth in the Maple credit products. All right, so what does that mean from a revenue perspective? Because ultimately what we want to be doing is growing both sides of Maple's marketplace to then be able to increase our revenues. And so our focus for 2026 is to effectively double where our AUM is at today to get to 10 billion in total. And so we're at about 4.6, 4.7 billion today. And so we believe it's realistic to scale to that 10 billion number. when you look at that 10 billion number, that will produce, based on our current NIM take rate, reaching that 50 million in annualized revenue, or what will be around about 4 million per month in revenue. So then what that means is the higher we can scale revenue, the more buybacks that we can produce on the back of the disclosure that we've released today with the most recent MIP. Then finally, just to highlight how we're going to get there from a distribution perspective. We have been very active within the DeFi space and done a great job in terms of accessing capital from the DeFi landscape. Now we are starting to expand and bring CeFi opportunities on board. You see this with Kraken and other integration partners that we've announced more recently. And there's going to be a pipeline of those that the guys have been working on in the first half that will start to come online more and more in the second half of this year. Then we're going to use the recent announcement of Robinhood Chain and the Robinhood Earn program and Maple's large participation within that to be the catalyst for more and more fintech integrations. We believe that many fintech applications will follow the playbook of Robinhood and will start to incorporate crypto rails into their backend to then enable Earn products and other crypto related products to their end customers. And then finally, as that continues to scale, the final frontier is reaching traditional finance markets and being able to access capital there. And that is where Maple is uniquely positioned. We have the structuring skills, the structuring capability, and the track record to bring our products on chain into a TradFi audience. And you can see that with each of those markets, you are increasing in the size of the potential of capital that exists there. CeFi is much larger than DeFi, FinTech is much larger than CeFi, and TradFi is much larger than FinTech. But we have to go through that scaling process to earn the right and be at the size to be attractive to each of those new audiences. All right, and then finally, what does that mean from a roadmap perspective? How are we creating the products that are going to enable us to activate capital at the scale and magnitude that we're talking about? The first is, and this is well underway in terms of development at a smart contract level, is modular strategies. And so when we talk about modular strategies, we're not talking about it in separating or fragmenting or having third parties operate on our platform. What we're really talking about is how we separating the strategies that exist and enabling pools of capital to be able to access those underlying strategies. Currently today, the loans are allocated out of the pool. So if you're in Syrup USDC, the loans are then allocated directly out of Syrup USDC. What we want to do is individualize the strategies. And so you can have Bitcoin backed loans, ETH backed loans, other strategies that are being deployed, and have pools of capital accessing those. And so what this is going to enable is a little bit more bespoke setup for fintechs that are integrating with us. They're going to be able to select the strategies that they want to deploy capital into or that they want to make available to their customers. And so we see this as being a really important underlying product and infrastructure development at Maple that will enable the opportunities to be created that are going to be most interesting, most compelling, and meet the requirements of larger and larger integration partners. Then as part of that, we need to continue to improve the developer experience and the way that developers are able to integrate with Maple. Currently, we have Maple Kit, which has been really well received and a real improvement on our previous API infrastructure. But now we want to start to enable agents to connect, to enable the seamless integration of Maple products overall. Then, as I alluded to before, this is the Maple HQ is what sits in the middle. What is that allocation engine for Maple? And so what we're looking to do there is to build out that real-time hub where we're able to monitor, manage, allocate, and distribute capital. And so we'll start with Maple HQ already exists at Maple, but we're now starting to invest more and more into the way that that engine is built out. And so this is leveraging the smart contract infrastructure that we have, but then also leveraging more and more AI use cases for where we can be monitoring and managing capital in real time. The better that the Maple HQ engine becomes, the better the yield that it's able to generate, the more efficient the capital that it's able to allocate, and ultimately the better the yield that it's able to pass back to underlying customers. And then finally, the transparency page, which we alluded to before, is something we're committed to continuing to build out to ensure that that real-time, full availability of information is available to Maple customers that are accessing our products, and to the Maple community that want to learn more about the current position of Maple the business, and our traction and growth.
All right. Thanks, Joe. Before we move on to Q&A, let's give a quick update on the comms cadence and guidance. So what we wanted to do is try and move towards a more predictable and structured reporting schedule. And so we will continue to have this quarterly ecosystem update call with Joe and I. This is going to be more of your kind of in-depth earnings format update. And we'll be doing that within the first 2 weeks of each new quarter, so following the end of the last quarter. On a monthly basis, you'll see the Maple memo come out, which will give financial updates. It'll go out via, every possible channel. So Telegram, email, the blog, X. And that'll give a bit of a snapshot of how things are going month to month. And then we will also hold a monthly AMA with some of the Maple leadership, and this will be in between, so months when we're not doing the ecosystem update call with Joe and I, and it'll give you a chance to hear from some of the leadership team at Maple. The next one there is going to be August, and the next ecosystem call is going to be in that second week of October. And in the interim, we are committed to real-time transparency. So we'll continue to update and build out the transparency dashboard where you can see financials, buybacks, the SSF, AUM, and new products. And do feel free to submit questions. So we want to hear from you. We want to know how we can do this better, and what type of information you would, or questions you'd like to see answered on future ecosystem calls. So we will provide that link after this call. So that concludes our formal presentation. So what we have done is gathered some Q&A. We wanted to hear from the community, so we've got some questions which Joe and I will answer on financials, product, Syrup token, and governance, and kind of the wider regulatory setup. So first one, we have revenues declined in Q1 versus the prior quarter, even as AUM and the loan book grew. I think this is probably declined in Q2. So what drove the sequential decline, and was it a timing effect or a trend? So it was a bit of a timing effect, as well as just the broader market backdrop. So some of the factors at play, you have a bit of NIM compression as borrowing appetite kind of dropped across the market and leverage left the system following October and then early February. So a little bit of NIM compression. We also had some loans where there was additional staking yield fall off and get repaid. But the bigger one was at the start of Q2, as I mentioned earlier, there was the kelp incident, and so there were a lot of withdrawals across DeFi. So really through April, we saw significant reduction in AUM, and that meant less loans outstanding. And we clawed that back in May and June. So we got the loans back up towards the all-time high. And what happens is we put out a loan, and then it takes 30 days to start getting payments through. So the revenue, there can be a bit of a lag in revenue. If we do a new $100 million loan tomorrow, we start seeing that revenue come in 30 days after that.
Yeah, the only other thing I would highlight is the return since that decline post the RV incident. And so I think we've had about 500 million in deposits return since that kind of low. And as we've already highlighted, the increase in the loan book overall. And so when you combine that increase in deposits, the increase in the loan book, and the lag effect where we report revenue on a cash basis, as Sid's alluding to, you will start to see that turn around. And so we've seen an uptick in revenue in June, and we're expecting that to continue based on the loan book activity and that deposit growth, as well as the recent launch of Syrup USDG. Then on this one, how does the partnership with Robinhood change Maple's strategy and potential to scale? So I would say that it hasn't changed our strategy. It has been our strategy to get at least one large fintech partner on board, and obviously it's been pretty incredible to land Robinhood. As I alluded to, there's very few protocols in the DeFi space that are operating at a scale that is able to be appealing to a partner like Robinhood. There's only a few protocols that are deploying billions of dollars today. And so you're looking at Maple, Athena, and the Sky ecosystem are really the only three players that exist across that. And interestingly, both Sky and Athena are allocators into Maple. And so the key thing here to highlight is that Maple is generating a real yield through our institutional loans. And so that is enabling that real yield to be passed back to customers like Robinhood. How does this influence our potential to scale? Fintech, as we've alluded to throughout the presentation, is a key part of our focus, and we see it as being that convergence into the overall financial system. Fintech for a long period of time has only had the ability to access traditional finance rails. And so for the first time, they now have an alternative to select from in terms of the infrastructure that they want to use. And we're starting to see with the adoption of Robinhood and many other fintechs that they're going to select crypto rails overall. It's going to provide a broader set and a better set of products that they can offer to their customers with better features and that their customers can access. And so we're extremely focused on how we can be a part of that and ensure that any earn program that's built on crypto rails is going to incorporate Maple in some way or form.
I'm happy to, I can take this one. So what is the difference between Syrup USDC and Syrup USDT versus plain USDC and USDT? Who uses them and what does Maple earn, and does Maple earn on the float? So our products, Maple's not a stablecoin issuer. So Syrup, USDC and USDT are stablecoins. Where Maple sits is we want to be at the application layer at one level up. So we build products on top of other people's stablecoins. And so the way to think of Syrup USDC and Syrup USDT are these are lending products, lending and yield products built on top of the underlying stablecoins. So we take USDC and USDT, we lend this to institutional borrowers. We collect interest on it. We pass back most of the interest to the lenders who are in Syrup USDC and Syrup USDT. And then we keep a little bit of that as revenue for Maple. So the way to think of them is they are not stablecoins, but they are stablecoin based yield and earn products, and so they can then be integrated into CeFi and neobank earn programs, or they can be held in DeFi. They can be looped or posted as collateral in vaults. But that's how to think of it. They are a layer on top of the existing stablecoins. So we benefit as stablecoins in general grow and as more stablecoins come out. Maple does not earn on the float. So the stablecoin issuer keeps the float or sometimes passes it through to partners. But our earnings, we're not withholding any earnings there from holders of Syrup USDC and Syrup USDT. We take the stablecoins, lend them out, and pass back the interest spread there. And that is important as we get to a regulatory question, but it means that we then benefit from things like clarity. Joe, do you want to take this one?
Sure. So the question is, what sectors drive borrowing demand, and how is Maple positioned to scale like Aave did last cycle? And so the sectors that we're starting to see that have driven real borrowing demand are more in the public company space. And so that's specifically DATs and miners. And that's been a real focus for us, is because they are larger companies, they are accessing larger amounts of debt. And so Maple previously wasn't at a scale where we could provide the size of loans that those partners needed. But we have now been able to scale to a size where we are able to provide them with their capital needs. And so this means we're able to compete with and outcompete in many instances all of the largest institutional lenders in the space. And that is a function of the scale that we've grown to. How is Maple positioned to scale like Aave did last cycle? I think it's very interesting to look at the Aave or the kelp incident that then kind of rolled into an Aave related incident earlier in the year. And you can see the kind of inflection point in the growth in Maple's loan book. Now, we like to think that's because of the work that we've done internally, but it's also because institutions have moved away from any borrowing on chain. They don't want to be holding their collateral directly in smart contracts and be subject to the risks that exist there. And so that is the unique function that Maple provides to institutions, is that they're able to hold their collateral in their custodian of choice and then still access the capital that they need. And so Maple really sits at that interesting confluence because we're providing all of the capital flow on chain through smart contracts and benefiting from all of the efficiencies that DeFi provides there, whilst also providing the institutional experience that these borrowers want. So the key for us is to continue to scale the amount of capital that's coming into Maple. And I think we've highlighted how we want to do that through our direct integrations into CeFi and into FinTech throughout H2.
I can cover this one. So this was around buybacks and the SSF. So MIP 20 mandated 25% of revenue to the SSF for monthly buybacks. How many were executed in 2026? And if zero, why? Has the buyback program stopped? Will you make it an automatic algorithm? Isn't aggressive programmatic buyback better? Just to correct the first part, so 25%, MIP 20 mandated 25% of revenue to the SSF for buybacks or building reserves there in stablecoins and other liquid assets. So in 2026, as I mentioned earlier, we executed around 2.5 million syrup tokens in buybacks. And the reason for doing less than the prior year was, there were incidents across DeFi. There was the drift hack, there was the kelp incident. So broadly, a lot of money went out of DeFi. And the space went into a bear market. Coinbase did a 15% layoff. BitGo was doing layoffs. And so it makes sense against that backdrop to conserve cash, strengthen your balance sheet, and ensure that you can survive as a startup and don't paint yourself into a corner where you're going to be forced to do a raise from a position of weakness with dwindling cash reserves. So balance sheet strength is always first and foremost in Joe and I's mind on that. However, we have listened to the community. People have said that you want to see more programmatic buybacks. And so we've come to what we hope is a constructive solution where when revenue's a bit lower, the buybacks will be a bit lower. When revenue's higher, the buybacks can be scaled up, but it will be programmatic, occurring monthly, and transparently reported on the transparency page. So just to recap what we will be doing, when revenues are below 1.5 million, it will be 10% going straight to buybacks. When revenues are between 1.5 and 2 million per month, it'll be 20%. And when revenues are above 2 million a month, so a healthier level, it will be 30% going to buybacks. So once again, programmatic. We've heard the community feedback. We will, we are adjusting and implementing that, and that will be up for a vote next week on the 12th. This one I can take as well. So we covered this before, but no, there is, so just importantly to reiterate, unlike some of the other projects you've seen recently, there is no equity token holder conflict. The token is at the center of the ecosystem. The VCs, the team have the same rights and participation as your average retail token holder. So we don't have a separate equity entity which only took investment from VCs. It is just the syrup token sitting at the center of everything Maple does, and so there is no conflict. So the duty of management and the foundation, everything is really oriented around the growth and success of Maple, and the syrup token holders are at the center of that. governance, and regulation. So when clarity becomes law, how does it affect Maple? What will become the top priorities, and how does strategy shift over 1 to 3 years? So, there's uncertainty around clarity, the timing of clarity at the moment. And so I don't think we want to stick all of our eggs in one basket. But the important thing is, because Maple is not a stablecoin issuer itself, we're relatively well positioned for a delay in clarity coming through, or when clarity comes through. But we think clarity will be a huge asset to firms like Maple, who are integrating with fintechs, with neobanks, with other CeFi programs, because it will broaden the reach and the distribution that we have, and accelerate the pace at which these firms are coming in and embracing tokenization, stablecoin yield, and lending activity. So I think our priorities won't change in the near term. As Joe laid out, we want to sit at that confluence of tokenization, institutional participation, and stablecoin growth, and so we feel like we're positioned for success if and when clarity comes through. That concludes our call. So thank you everyone for attending. As we laid out before, so we will be doing our next quarterly ecosystem update in October. Between now and then, we will have the monthly updates coming out. We will have AMAs with some of the leadership team from Maple in August. And don't forget to check out the governance page to see MIP 21, and the vote for that will go live next week, I should say, around buybacks. So thanks everyone for participating, and we'll see you on the next one.
Awesome. Thanks everyone.